Good morning, everyone, and welcome to the European crossover webinar. And we've seen a quiet, overall quiet session yesterday, and probably for today also in FX. We are seeing Nasdaq steady, flat to a little bit higher here. Also in the spooks here, right here at 42.26. Looks like they're trying to push a little bit higher. I know that bonds are actually on their highs right now, so it's actually giving a boost here. And a bit surprised that these bonds are on their highs, considering that tomorrow we do have CPI and could be a pretty big mover. We'll take a look at what we have as far as economic news. We did get German current account balance. That was 2 hours ago. And then actually nothing until we roll into the States. We do get wholesale trade balance, wholesale inventories. That won't be till 10 a.m. Eastern. And then we do have Bank of Canada rate decision. And that will be it. Although tomorrow we do have ECB, CPI, and a 30-year bond auction, which, like I said, to be quite honest with you, honestly, I don't even get what the bonds are doing on the highs, considering the potential impact that we may see and, tomorrow. It's really a really big concern. I was looking at a couple of markets here. And don't forget, I mean, if you look in here, look where crude is at. We haven't been this high in crude since who knows when. Seriously, I'm not even joking on here. Look at that. Over $70. Look at soybeans. Remember the old beans in the teens? Shit, we're knocking on the door here at $16. And this isn't like a weekly, forget a weekly chart. This is a monthly chart. Look at these runs here. Corn, monthly chart. Look at that. Can't even remember corn being that high. Nearly $7. And of course, look at wheat, close to $7 also. So to me, I think we would eventually see a pretty big number tomorrow in CPI. So we shall see what develops, but I'm a bit surprised here that bonds are actually on their highs. As I mentioned, we don't have any economic data. We did have German import exports. That was 2 hours ago. Imports were down 1.7%. They were expecting down 1.1%, and exports were down 0.3. They were expecting up 0.5. Take a look at the euro. Just slightly higher. Same thing here in cable. And they've had relatively quiet sessions yesterday. Aussie dollar, dollar yen, and dollar index. Bitcoin continued to slide. We're actually seeing a little bit of a rebound today, a little bit. I wouldn't be surprised if they eventually do break this 30,000. But trying to get a little bit of a bounce today. Taking a look where gold stands. Just hanging around close to $1,900. Yesterday we did go on a rally up to that resistance we had, 1906 on our 5-star support, which was the initial one, 1883, just about hit. So with that, we're going to get started with the analysis. And considering how quiet the FX has been, it may be a rather quick analysis because most of the levels stayed the same. Let's go move into the euro. So the euro traded in a quiet session on Tuesday ahead of the ECB. Resistance remains 22.27 with a close above 22.54 to extend a new leg. Support will be the same here at 21.24. So no changes here in the euro. And many of the dollar pairs are going to be like that. We just had very quiet sessions yesterday. Let's go and move into the cable. Cable posted a near identical bar on Tuesday compared to Monday, except it was bearish here. Resistance is going to remain at 42.06 with the daily close above that, allowing for a new leg higher. Support will be 41.01, and we're a little bit higher, so we're kind of reversing where we were yesterday, but still within a very tight range, even a very much more tight range today. Let's move into the Aussie dollar. So the Aussie, like many of the dollar majors, traded in a tight range. Look at that. On Tuesday compared to right here was Monday. Immediate resistance will be 77.96 as it was before, with support at 77.08, so no changes here. And on to the dollar yen. And you can see Thursday we actually engulfed the prior day, but look, once again, a very tight range here. Dollar yen posted a bullish engulfing bar in a narrow session. Here's that bullish engulfing bar yesterday. There we go. In what was a very, very tight range. Resistance for Wednesday will be 983 with support at 923. We're getting a run in here because bonds are just rallying. Honestly, I don't even get here with bonds, but they are rallying. Bonds have just made new highs again. 32.20 right on half a tick from their highs. Let's go and move into the cash dollar index. So the cash dollar index traded slightly higher in a 23 tick range on Tuesday. No changes. Support on, and I put on Tuesday, which should be Wednesday. Although it's identical to what was the day before, why it's showing that. Support on Wednesday will be 89.69 with resistance at 90.42. So it's going to be identical. No changes here. That's what I'm saying, that the analysis would be rather quick because we had this tight ranges yesterday and really no movement. And moving on to Bitcoin. So Bitcoin has been unable to generate buying enthusiasm despite a steady drumbeat lower. No one is finding value at nearly half of the all-time highs. Therefore, a break and a thrash of stops below 30,000, 29,000 should see a flush to 27,000 before an eventual bounce. Bounceable bottom at 24K. Resistance will be 33.5. So 33.5 on the upside is what we have. And on the downside is going to be these lows here. $29,852. And moving on to the S&Ps. So the S&Ps opened strong on Tuesday, finding sellers at 42.36 on a break of 42.14. They exceeded support, which is buy support at 42.09, eventually dropping to 42.06. The index rallied back, but ahead of Thursday's bond auction. I don't know why I put in bond auction, and ECB. The index may find 42.28 as resistance, and actually we're right there at 42.29. So we'll go with what we had, but they're certainly pushing that because of U.S. rates dropping lower. And support's going to be 42.09, which we had before. We'll keep that the same. Moving on to the NASDAQ. Well, we did go in and break yesterday, right from the get-go when the cash market opened, but we rallied back and we've just been holding steady against this 13,815 right here. You see that right there, 13,812. I meant to say 13,812. Support right now for today is going to be right there at 13,776. And resistance, be right there, that close, 13,875. Next, let's go move into the gold market. So gold fading back from bias chart resistance on Tuesday at 1906 before nearly hitting bias chart support at 1883. Let's see here. Look at that. We just about hit that thing right on the dot yesterday. Look, here's resistance. And ran out of gas right there at 1906.60. And support we had is 1883, and the low was 1885.60. Well, pretty good. Close enough for government work. We're going to go and keep the 1883 as well as keep the 1906. No changes there. Both levels will remain the same for Wednesday. So we are really making short order of this. Now let's go and move into the crude oil market. This is just absolutely amazing. And that's what I'm saying. My concerns are for CPI tomorrow. And then to be following that with a 30-year bond auction, really could find ourselves in a a world of hurt, but apparently right now, bonds don't care. Look at them. I mean, they're one tick from the highs in the session. Look at that. Quite a surprise. Now that's 10-year. Anyway, let's get back to the crude oil. So crude closed above $70 on Tuesday, opening a potential move to $73. Immediate resistance is going to be $70.92, which is 161% of the recent range right here, $69.96. Down here this low at $68.47. And support, boy, this thing is really holding up really well. I mean, look, when was the last time, I'm not even joking, when was the last time we saw $70 crude? You know, this is just something else. I mean, this thing is really starting to take off, not to mention some of the other examples like where soybean is, corn, wheat, actual things that people consume, use, lumber. Like I said, it just seems like we would be open for a bit of a surprise tomorrow. Support is going to come in right there, 69.19. And this thing's been on a runaway. Look at that. After we fell down here, look, we bottomed at 61.53, and look, we've rallied $9. That is huge. And also the implications of getting above $70. I'm going to look at IWM. I don't follow IWM. I can try and take a look at it. I just don't follow it. So, see if there's here. Continues to scoot up higher. Look at that. Resistance comes in at 234.53 on IWM. We'll go on the weekly. Yeah, 234.53, so we're just about there. And you can see how it's been moving along. And it certainly has been leading the band. Yesterday, I know it was leading higher, and still pushing up higher. Still have to caution. Tomorrow we've got CPI, and they are expecting that thing to be up. And like I said, when you look at, I hate to, sound like a broken record, but I was just looking again at these. I hadn't looked at it in a while. I mean, look at soybeans. I mean, this is crazy. Look at this. And corn. Talk about inflation. Look at that. Look at that. That is unbelievable. This is since last August when we were at $3.43. Look, we've doubled in price. Look at soybeans. And wheat. Let's try to peer back a little bit. Look, still up in here in the stars. Those inflation numbers tomorrow would be bananas, and I'm not even joking. Yeah, I don't have access to DAX. Mark, want to look at DAX? I don't have access to DAX. I don't use the other that other one, so I don't have access to DAX. So we'll go and take a look at palladium and platinum and silver. Let me see. Let's take a look at platinum. Well, we talked about this just yesterday, so really no changes. I mean, we're just a little bit on the low side here. Well, we talked about this, and in order to stop the bleeding, we do need to get back above here, which is 11.99. Yesterday, you can see here we rolled off. We were doing a little bit better yesterday, and look here, we're at 11.16. And we talked about this also. This is support. You lose 11.52 and just opens the door for them to go into the 11.20s. And let's go to palladium. And we were able to establish a little bit of a hammer yesterday. So we're looking okay. We're just treading water right now as long as we hold in this 2808 area. A couple of dollars here and there. But in order to really get things going, we got to get above 2860. But as I mentioned, I'm even surprised we're even here. Even though bonds were, I don't even get how bonds are even rallying. To be quite honest with you, look at bonds. I mean, I just showed you those. I'm thinking we're just going to go tomorrow. It's just going to light a powder keg tomorrow. And don't forget, tomorrow we have ECB, so they're probably going to make things a little bit more easier. Then and potentially you can see a big dollar move. And then of course we'll have CPI, and that number just ought to scare the bejeebus out of people. Seriously. Because then we have the Fed, and now it's going to be the old. We already had one Fed person say we ought to be starting to talk about tapering. So what the heck's going to happen there? You see what I'm saying? To me, it just feels like, someone's just trying to push this market higher going into the auction, although it's a 30-year auction. But nonetheless, here's the 30-year. We're still up pretty strong there. We're not going too high. We're not going bananas here, but interest rates, the NASDAQ is highly impacted by interest rates. So that might be why it's having a tough time going too much higher. S&P still here. I just think that the risk tomorrow, we could really see tomorrow these markets come off. Just, like I said, just trying to forewarn. And we're trading in a relatively tight range. Look at that in profile. And there's what we've done insofar in S&Ps. So relatively quiet. And you would think with bonds making new highs, we'd be going, well, not new highs, well, new highs for the session, would be going gangbusters. But I think this market, like I said, is getting. And one thing I heard one guy yesterday was saying, volume has been very, very low. So to me, that makes me think that they're holding, keeping these markets. It doesn't look like it because you're seeing price, but keeping these markets a bit at bay ahead of tomorrow's CPI, and I think we're going to get some fireworks. I would be very cautious in some of these markets. Like right now, when we saw these bonds take off, I mean, here's the 30-year, but the 10-year, which generally the market pays more attention to. Look at that. We saw these things rip up. We should have seen the NASDAQ rip up into here, like into the 1380s. And, we kind of popped up a little bit, and look, we kind of come back right back down. Here's the volume point of control for the week so far. You can see that right there. That orange line, 13,740. We're away from there. Volume point of control for the day right here is what we're at, 13,820. So with that, we'll call it a day. We'll get the bias chart posted. Thanks for joining us here on the European crossover webinar. We'll get that posted in the room, and have a good day.